So, welcome to the 11th episode of Tokenizing Everything, our weekly interview series with thought leaders in the blockchain industry. Today's guest is Fabio Keller from IBM and Digital Assets. Before we begin, I have to mention that all opinions are solely personal and do not reflect the opinion of Amazing Blocks, IBM, of other involved parties. So, Fabio, pleasure to have you here today. How are you?
Thank you. Thanks for being here and welcoming me. Yes, I'm feeling great. I'm in front of celebrating my 1 year home office location as a workspace. And I also would like to comment here that it's my soul and my personal opinion, what I'm saying here, in order not to get in trouble with the mothership over in Armonk. And looking forward to our discussion.
Yeah, that's perfect. So maybe before we start, would you like to briefly introduce yourself, who you are, maybe a bit about your personal background, how you got into technology and IBM, and generally what you do at IBM?
Yes, happy to do so. I actually had all the time fun in working with electronics. So I started studying electrotechnical engineering at the University of also at ETH in Zurich, and this was also the moment where I really started to get serious in the field of programming. I'm a programmer. I started actually my career at the consulting company as a programmer, and I did this kind of evolution because I found out that box moving is too time consuming. I've imported during my gymnasium computer clones, IBM clones, and sold it here. And this was always, linked to physical boxes that I had to pick up at the airport at certain time slots. And this was a bit in contradiction with my education. So I moved on, and writing software is something you can do independent on the location, independent on the time zone, and this is why I actually ended up there.
Okay. Yeah, then that's a very interesting background, like I like the programming aspect. So I'm a huge fan of people that can code. So that's very exciting. So now you work in IBM Digital Assets. Can you maybe give a brief overview of what IBM Digital Assets is? Maybe some people, I'm sure a lot of people will know IBM, but may not be too familiar with IBM Digital Assets. So what are you guys doing? What is your role, and how do you want to foster, the blockchain space as a whole in the space of digital assets?
Yes, our our clear our CEO always mentioned, be relevant and make the world a better place, and seek for work that really leverages something and makes something happen. And we from IBM have in many parts, we have great technology, we have research labs, and research labs do great stuff. They look ahead, they go to the bottom of issues. And from time to time, there emerges some technology that afterwards can be used in products. And IBM Digital Assets is a group of people working globally, rather a small group, but quickly growing, that has taken the mission to say, we are entering a new decade of digital assets. And digital assets, it's my key is my coin, means you have to protect your keys. And securities is some of the home turf of IBM since over 40 years. And with that, the company started to make our technology ready for digital assets. And this is ending up in the HyperProtect suite. And this is basically nothing else than increase the security posture of your infrastructure to make it more reliable and tamper-proof, which is a nice counterpart to chains, which also are tamper-proof, as we all know, which are also backed by cryptology. So is it with HyperProtect from IBM? It is with cryptographic algorithms, protected, secure enclave, secure boot, secure image build, and stuff like that. And this is actually what is all behind IBM Digital Assets. No magic, no secret sauce, but a lot of know-how and a lot of patents and a lot of technology. You're on mute, and I'm not capable to read your mouses.
Yeah, sorry. So IBM, it's great that, as a pioneer, you guys are tapping into the space also as a larger corporation, because I think a lot of the larger companies that have a more centralized structure are kind of, slowly tapping into the space, or not at all yet. So it's great that IBM is taking the role of a first mover here from that perspective, right? So obviously, in that regard, tokenization is probably also a topic that is quite relevant to you, obviously as the key driver for these digital assets. So maybe can you give us a brief overview of how IBM wants to address this and what solutions you guys may offer in that space?
We see ourselves clearly as the provider of security solutions as an infrastructure. We do not have products or software or components that address a real end user need. I have to clearly state that. Whether this is for good or for bad, I can't judge. But fact is, we don't have that. But we bring to the table the security to increase the posture of any kind of company, be it a big one, a small one, be it a startup, be it a traditional one, in order to have a rock solid and watertight infrastructure, which is, I think, it's an absolute must, and with an increasing demand in order to match the chain technology overall that is tamper proof.
Mm-hmm. Yeah, definitely. And so at IBM, you would approach this with a more permission based system, right? Initially. So maybe can you kind of compare what benefits this may inherit, especially in the early stages, maybe in comparison to have a permissionless system?
Yes, sure. We have maybe people do not know, but IBM is one of the biggest contributor to the open source community, and Hyperledger as one of these projects that go onto the Linux Foundation later on. We contributed there a tremendous lot, and this is permission based. Yeah, that's absolutely right. I believe it's kind of the maturity curve.
Mm.
If you're from a traditional enterprise, and then you come up and say we do open and we do collaboration and stuff like that, they get chilled to the bone,
Mm-hmm.
basically.
Mm-hmm.
And if you tell them where is my data sitting, and you say it's on the chain, yeah, where is this chain? Yeah, one node is in Singapore, one node is in Afghanistan, one in Russia,
Mm.
one in Venezuela, and some in the US. They clearly, you get immediately that's a no-go. And based on that understanding, we came up with the solution like do a permissioned network that you have kind of control, but not a single node
Mm.
that is in control of everything. And this is something that was kind of a compromise among banks,
Mm.
that they could go ahead and mention, yes, we agreeing on such an approach. Instead, they are coming from a totally centralized thinking approach
Mm.
where everything belongs to them and they dictate what's going on next. And all of a sudden, working in a group of bank is already a relief from that paradigm,
Mm-hmm.
and is like a necessary step in between. Therefore, I think uh, permission networks is a solution.
Mm-hmm.
It's a temporary solution, but it's almost a step that you have to walk through in order to
Mm-hmm.
end up in an unpermissioned network, in a permissionless network.
Yeah.
And I think your company is one of the examples where you say, actually, I do not know where my data is stored. I just know that it is sitting on the chain, and which node around the globe is actually having a copy of it, we do not know, but it's sitting there and it's cryptographically protected.
Yeah,
And
it's protected, through the decentralized structure and also the unique name hash that we leverage. And so therefore, yeah, like what you mentioned with the bank aspect, you obviously IBM works closely together with banks. To some, they see this emerging token economy, this decentralized finance, topics that are emerging as a threat to banks. So maybe can you give us your take? Maybe do you think that blockchain and the decentralization that is coming along with it are a threat to centralized players such as banks, or do you think maybe they will, this technology and these centralized players will find common ground, maybe even through solutions that you guys offer at IBM?
It's interesting. I was working once in a while for UBS. It was my client, and as you might recall, they have been taken an office in level 39 in London
Mm-hmm.
as of the first time a bank ever has been joining a location like this. And this was clearly tapping into this fintech industry in order to link up and probably leverage each other. Um, in my daily life, where I have a lot of contact to traditional banks, but as well to fintech and startups, there are, I think, under the traditional banks, there are two parties. Those among them which immediately say digital assets, that's not relevant to us. Not at all, you know. And then you see those that say, it's interesting, we are not too clear what is it all about, but we would like to understand and dig into it. And then in that group, we have a wide spread between those that have studied it, have a plan, have a master plan, how they want to make it into production and how they want to take benefit. And you have those a bit behind the curve that saying, we need first to understand what is really the coverage of it, and how can we do first steps, meaning you need to educate those first in order to enable them to think what is the relevance to their business models and to their way how they operate in the near future.
Mm-hmm.
And therefore it's quite interesting. It's I see a lot of emotions if it touches digital assets. If you break it down and say it's the cryptocurrencies, it's a very, very emotional topic, you know. Yeah. Most bank immediately say, no, this is nothing for us. This is it's all bad, it's all black money, it's all money from stealing. It has we do not want to have our name put in the same line with Bitcoin, you know. Very emotional. Whereas if you talk about tokenization, it's completely different. It's rather a neutral wording, which creates which wakes up quite a lot of interest, and where they would like to understand in more detail how things could look like. So it's depending on JP Morgan. You remember the famous out saying, I fire everybody that is thinking of Bitcoins, and these days they issued their own coin. I mean, and this within 2 years time span, you know, it's quite a big shift in thinking.
Yeah,
and I wouldn't be too surprised to see similar U-turns in other traditional banking institutions.
Yeah, definitely. I fully agree. I think, it's great that you mentioned JP Morgan. I think a funny anecdote, Jamie Dimon, he went on stage, called Bitcoin a fraud. And I think then later, like a couple of days later, actually JP invested a couple of millions into, cryptocurrency. So it's like, you don't really know why they even have that stance. Some I even argue that it was intended to kind of, give them a bit more time to tap into this market. So it's a difficult topic. But do you think that, legally compliant tokenization, for instance, which is possible in jurisdictions such as Switzerland now, which is possible in Liechtenstein, where we leverage it at Amazing Blocks, do you think this will kind of be the bridge to kind of, onboard, financial institutions to the sector, which will then subsequently maybe even look at more exotic currencies such as Bitcoin, Ether, or even other, altcoins? Or do you think, these institutions will more focus on the tokenization aspect, where they can, morph liquid assets into liquid ones and have the legal compliance in place, but they will kind of neglect or jettison the stigma of these cryptocurrencies? So what is your take on that?
The way I look at it, based from the conversation that I have with banks, I think internally they drive the tokenization story. This is something they discuss, they look at, they start to develop and think how to make it happen. Whereas from cryptocurrencies, they do not want to get in touch. On the other hand, we all know banks, if the customer comes to them and asks them, hey, I would like to invest in Bitcoin, and the answer is sorry, we can't, then this is probably pretty bad. Because if an investor really wants to invest in Bitcoin, he wants it, and then he goes to somebody else that can offer that functionality. And this means basically the bank will have outflows of money. And currently the banks are incentivized by the assets under management. Right now, imagine if multiple clients come to the bank and say, hey, I want to buy Bitcoin, I can't do it here, please transfer a certain amount to another institution that that has this functionality. This generates immediately a big headache within the bank, and they are, I would say most of them are rather client focused and want to do additional business or grow the relation and sell more products. And this is the worst what can happen to them if they have outflow of money of a happy customer simply because he cannot. And the workaround, what they do typically is they just sell them some certificates from boutiques or from third parties, But if you're a bit a knowledgeable investor, you probably aren't feeling not too happy to invest in a certificate from a third party that takes another a few percentages for fees and management fees and tax fees and stuff like that, just because your traditional bank can only process easy-based instruments in the portfolio. And therefore, I think it's a two-pronged approach. One is if customers start asking directly, this will make a big push for the banks. And on the tokenization side, it's an inside approach, I would say, from the banks by themselves.
Yeah. It's like they on the one hand want to stay ahead of the curve to some regard, but also will be driven, by the interest. So that's a great point that you mentioned there. So this is very right. A question from our partners at BeinCrypto fits right in. Like we weekly ask them to post questions to the community, and one of the questions from the community at BeinCrypto was, what is the best way for retail investors to tap into this market? So what do you think it will be through, banks and such, or do you think it will be through, these new emerging, companies which can be compared to banks like Binance, Coinbase, crypto.com and so on, these centralized exchanges? Or do you think even one step further that it will be through, for instance, decentralized exchanges? So what is your take on this?
I mean, I have obviously an account at Coinbase and then all the others, but this is for I would say tech savvy persons. And if you're a person that has little interest in all the technology behind it, you want somebody to trust. And typically you go to somebody that understands the matter, and these are the banks. Do I want to have the keys stored on my mobile phone or my ledger key or whatever? No, absolutely not. I want the bank to take the custody functionality. I do not want to have making backups, make sure that it is in a safe place, that I don't forget the password and all that crappy stuff. And therefore, I would say for the vast amount of people that are not tech savvy, they are looking for a solid partner. And most of the time, you go to somebody that you know, and these are the banks. This is not Coinbase, these are, and then you're reading in the news, oh, it has been hacked. It's not the blockchain that has been hacked. It has been hacked, the IT systems within that company, and the distinction of the view that is there a difference is just for tech savvy people. And therefore, I would say the answer should be banks, or at best a startup like Revolut or PayPal, or I don't know, where you have kind of not too much trust into, but it comes easy. Its user convenience is very high, and you just have hopes that behind the curtain it's really working solidly and and with a good infrastructure that has the right security posture to withhold today's cyber attacks and cyber crime.
Yeah.
And I mean, I don't know how you see it, but I truly believe that the banks should step up. And if they don't do that, they're missing a part of the cake.
Yeah.
And the
Definitely.
cake becomes bigger, or the other way around. If you assume that their portfolio is the full cake, then their cake became smaller,
Mm-hmm.
because some outflows of money will go to new companies that will fulfill the need of a certain amount of people.
Yeah.
Really interesting. And I don't know whether I can share a slide here, which is one of my favorite. I think we are entering big shifts. At least this is what I'm seeing here.
Mm-hmm.
I'm working since probably 25 years. I do not even know exactly, but I think around 20 plus years, and all the time in finance industry. And if we comparing, if I'm just looking and observing, we see traditional assets on the left hand side. They are typically closed. They have a hard rhythm of T+2 or T+5 or T+7, and in the bad days for payments, maybe T+10,
Yeah.
stuff like that. It's all ring fenced. Data is protected, withhold, centralized, nobody has access, no sharing.
Mm-hmm.
Payments are done over the Swift network, and the whole thing is driven by cutoff times. In the morning, you have the cutoff time for the APAC stock exchanges. Later on is the cutoff time for the payment network, that it will still be executed with the expected date and stuff like that. And if you compare it to the digital asset space, it's open-minded, completely open-minded. It is all in real time, or within seconds, minutes, or something like that. We talk not about days. It is in the internet taking place. So it's fully exposed to all cyber crimes, cyber fraud, attacks, whatever, DDoS attacks, all kind of things. It's instead of Swift, I see decentralized finance is picking up on Swift and makes Swift redundant and obsolete, irrelevant. And if we think of cutoff times, we have 24/7, 365. And that's not the Microsoft Office 365. That is around the year, around the day, around the clock, around the globe. And this is something that challenges the banks to the bone, I believe. Not sure whether they've already realized what the implication would be of their business processes in the mid and back office. So that means trading and settlement and bookkeeping and stuff like that. So it's, I don't know, it's tectonical shifts in what we experience here. And the banks are already these days, they are unhappy and moaning around that the fees are not paid enough, or there is not enough fees to be paid for the back office operations. And what I'm seeing here is that on top of the traditional assets, they will have to run or to stand up an operation for the digital assets on top of it, so that they have even higher costs. Even, of course, the new world you can do with AI and highly automated and effective and efficient processes. You can build something that is probably less costly than the traditional way. But you have to stand up, and you need to have a DevSec operation.
Yeah.
This 24/7, 365 is something else than if you just communicate over the ring-fenced Swift network that is dedicated lines, dedicated data centers, and just selected counterparties. It's a different ballpark, and I'm looking forward to help. And this is why I can close the loop and say, this is what IBM wants to do. We want to be relevant. We want to help those parties that are working in this area to have a higher security posture, to be efficient, to scale up, to scale out, and to be secure, in order to then on top run whatever is needed to have a trading facility with tokens, be it Bitcoin, stable coins, whatever, you know.
Yeah, that's great that you showed the slide. You know, it's very innovative, and I think a lot of the people watching this and or listening to it and just seeing the listening to it, that maybe I would advise watching it on YouTube as well, because this really gives a good comparison between, you know, on the one hand the pain points in the traditional asset sector, on the other hand the benefits, you know, the pros of the digital assets. So thank you for sharing this, Fabio. I really appreciate it. And it's also what you mentioned, what I found interesting, and I think that's important to emphasize, is that, you know, when we talk about hacks, right, in the blockchain space generally, mostly it's not the blockchains, as you mentioned correctly, that are being hacked, right? It's the centralized players in this market that are being hacked. And I think we have to definitely double down on this so people will kind of lose the stigma. Blockchain obviously can be hacked, but it's very hard, right? So that's also a great point that you mentioned there. And I truly believe that, you know, it will be, you know, kind of a dual approach. On the one hand, people that are more hesitant to tap into this digital age will probably go through banks, but on the other hand, I think especially young people will probably also adhere to these more decentralized structures, to these more innovative concepts, because I think platforms such as Binance can definitely be a great challenge to traditional finance sectors or players, because Binance, you know, is sometimes described as the Bloomberg of crypto. And for those that have been using Binance, I mean, Binance has such a vast majority of different things and tools that you can leverage there without having to pay the fees that you would have to pay maybe in the traditional finance sector. So I think it will be kind of a dual approach, and the core, you know, structure or benefit will be that we find common ground and that we kind of find a balance between these two sectors. So yeah, so it's great that you mentioned this. And just to kind of go back to this slide quickly, in terms of morphing or transforming, therefore bridging these two worlds, the traditional sector and the digital asset sector, what do you think will be the best use cases for these tokenized securities, for instance?
Oh, this is the $1 million question where I do not
Yeah.
have a real good answer. I think the most pragmatic one is if clients go to banks and ask, I want to invest in whatever coin.
Mm-hmm.
This is forcing them to make the step into that world. Whether it will have wide adoption, I don't know. You know, it looks like there is a chance that it can become something that is becoming even more popular once it has been risen to 40K Bitcoin. You know, then it even attracted more people that
Mm-hmm.
wanted to be in the space, whether they understood it or not, irrespective, but
Yeah.
they wanted to have it, and it was obviously a headache to the banks
Mm-hmm.
when they have to answer, oh, sorry, we cannot, you know. And all those guys that doing certificates have been in they felt very, very uncomfortable, even halted the trading, even if
Mm-hmm.
they're obliged to do market making. It was quite fascinating to observe that you just could sell it and not buy it any longer.
Mm-hmm.
Um, these are signs that things need to change and to transform. On the other hand, the tokenization, this is something that would be very interesting and obviously also way more efficient than today's process. And if we see firms that or companies that are willing to do tokenization in order to increase their capital or stuff like that, then it would be very viable. And in Switzerland, we have this STX that
Mm-hmm.
probably tries to do that. If it's becoming faster, cheaper, better
Mm-hmm.
as an experience, I would say flow will slowly move over, you know,
Mm-hmm.
then there is no reason to stay on the old platform, but they working hard to do that. And so far it's in the makes. And I think rather sooner than later, we will see first steps or what they're going to announce. But I do not really know the use case. On the other hand, I would love to invest in tokens for assets that currently are not tradable today.
Mm-hmm.
Invest in a particular building. Today, I'm forced to invest in a fund
Yeah.
with a whole bunch of buildings, which I would say no, I'm not interested. I want to invest probably just in this shopping mall and not in all shopping malls that are part on this fund. And therefore, if we go back to that slide here, if I'm looking back,
Yeah.
in my earlier days when I started working, we've seen evolutionary step in the traditional assets. They started to create funds, and the new message was, as a small investor, you could participate in a portfolio with an efficient frontier that wasn't possible to build with just 20K with assets, with single stock strategy. And these have been small incremental evolutionary steps which all the time have taken advantage on top, or has been built on top of these 5 points.
Yeah.
Cutoff time, Swift, ring fence, T+2, close-minded. And this is something democratizing with the new approach, where I see a ton of possibilities of tokens where I have the chance to invest in and to really make an asset allocation that differs from others, and where I can live to the beliefs and to invest to the beliefs I'm willing to do so, be it in a CO2 certificate or in an avoid plastic strategy, from porn and from war producers or oil exploration companies, things I can really start going in the direction that is very fine granular, if there are tokens available that I can invest. It's super cool, and I think we have a bright future in front of us. Like I mentioned, the cake becomes bigger, and the banks are a bit struggling. Either they embrace it, otherwise their so-claimed 360 view is reducing to something less than 360. They say typically to me it's 359 degree, and I tell them I rather see 150 degree probably at best.
Yeah. Yeah. Yeah.
This is all the time a good basis for quite animated interactions and good discussions.
Yeah. That's a great answer there, Fabio. Like,
And another example that a wow moment that I
yeah.
experienced once. I have been working on a trade finance blockchain project, and then we had a pizza dinner with the team. We went to an Italian store and ordered pizzas, and then we paid, obviously each one on his own account. And our design thinking, or our designer girl, she forgot her to take money with her. And Hera, an Indonesian girl living in the Netherlands. And I told her, hey, Hera, I'm going to pay it for you, don't worry. And for joke, I mentioned, you can pay back by Bitcoin. And
Yeah.
she mentioned, oh yeah, hey, no, yes, of course. She grabbed her phone and typed in, how much was it? I don't know, 30, 50 euros. And I grabbed my phone and showed my QR code, and she just clicked, And at the same time, I was paying with my credit card on the terminal from this Italian in Munich. The terminal delivery guy had to know that there is a transaction takes place. Then his bank knew it, my bank knew it, and my credit card company knew it, Whereas my Bitcoin transaction, the whole traditional world did not even realize that there wasn't a transaction.
Yeah.
And this was one of the moments when it clicked and make it the dimension clear to me. What could it mean if you start building up based on blockchain transactions, and in general, if you start working in the DeFi space? This is very, very powerful, and it's just the beginning. We are just at the beginning here. And I'm not sure whether banks can obviously follow that example, and they see it and have a dozens of comments and why it's not correct and blah, 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 a million problems. But fact is, it took place 5 years ago in Munich. It's a fact,
Yeah.
and they better start embracing that than
Mm-hmm.
just denying it.
Yeah.
Denying is the start to be of being irrelevant,
Mm-hmm.
and not sure whether this is um, uh, a prospering promise for the future.
Yeah, definitely. I think that peer-to-peer interaction between people, avoiding the friction of intermediaries is one of the core benefits of applying blockchain technology to whether it be trade finance, whether it be a payment transaction, whether it be, an ownership transfer of tokenized assets, like for instance with Amazing Blocks, where you can avoid having to take all the necessary legal steps that would normally have to be conducted, right? So I think that's like this frictionless economy and the peer-to-peer, exchange of data, information, goods, assets, whatever it be, is really morphing us into a more digitized and more efficient and cost and time saving industry. And I think that's a great use case and a great example that you mentioned there. So 5 years ago in Munich, history was being made, right? For you at least. So yeah, like as a last question, something that I always like to ask my guests is, where do you see blockchain and the entire digital asset space, maybe, since we've talked about that a lot, in 10 years from now?
So 10 years is a bit a long time period. And our research labs, they do every year compile a report,
Mm-hmm.
um, outlook, and that report goes to the board of IBM and will be discussed and stuff like that. And a researcher told me once to me, mentioned, see, we pretty good have an understanding what will come down the road the next 2 to 3 years.
Yeah.
We know what we're doing in our labs. We know what others doing in other labs since they collaborate, and it takes time to make a product out of it, and therefore 2 years, that's foreseeable. Everything beyond 3 to 5 years is really far,
Mm-hmm.
and we have also little clue. On the other hand, they have some guesses and predictions, and one was IoT, another one was quantum, and today we have IoT, today we have quantum. Um, they also showed me 10 years ago retina displays,
Yeah.
and we've been standing around this display and retina, when
Yeah.
we still had large pixels on our screen, and
Mm-hmm.
today you carry it around with your mobile phone. 10 years, I would say, I see a transition from traditional legacy behavior towards permission, probably networks, to permissionless.
Mm-hmm.
It looks to me like a bit ETL levels. You cannot go from 1 to 3.
Yeah.
You have to go through 2, like I explained a little bit at the beginning. And therefore, I would say they will do permissioned and will make experience, whereas the unpermissioned group is also growing, and probably growing quicker than the
Mm-hmm.
permission one, because the permission ones are complaining it's not interruptible.
Mm-hmm.
We have difficulties to go to the next permission network. And guys, this is solved.
Mm-hmm.
Go on a truly permissionless, which is existing today,
Mm-hmm.
and you have this interruptibility headache is gone.
Yeah.
But you need to design your solution that it is compatible with the unpermissioned network. And this is a big shift in mindset. It's like from closed ring fence to open and collaborative and co-creation. And I expect that we see that the DeFi space is, and tokens and digital assets are taking off rather quickly
Mm-hmm.
into this hockey stick, that the permission networks somehow remain but become
Mm-hmm.
less relevant, and from the traditional banking there will be some relevance, but over time the flow will move over. And within 10 years, I'm a positive thinking person. I hope that all my assets are on a unpermissioned network. My portfolio sits somewhere on a permissionless network,
Mm-hmm.
and I wish that the bank is the custodian to me,
Mm-hmm.
that they take care for that, and that I get an exceptional user experience, be it on my mobile phone, be it on another screen or through my virtual reality
Mm-hmm. Mm-hmm.
um, glasses. And this would be the way forward, and where I also believe you can catch the younger generations, which actually do not care about all the legacy stuff, where
Mm-hmm.
they're just looking of user experience, how is accessibility, and they cannot imagine that with this MasterCard, you're not allowed to withdraw money on this ATM because it's from another institution.
Mm-hmm.
These things are from the past and will not survive, you know. Revolut has shown it to us.
Mm-hmm.
Put your card in whatever ATM and you get money. That's the way it must
Yeah.
be, you know.
Yeah.
Easy, simple, with great user experience. And I hope in 10 years everything is permission on a permissionless ledger on a
Mm-hmm.
chain, and my whole portfolio.
Mm-hmm. Yeah, that's
Getting rid of the ISIN numbers, you know.
yeah. Yeah, like definitely. Although we may need still some certain degree of standardization, but I fully agree that I think in 10 years it should definitely be possible that we have all our assets maybe in a digital wallet, potentially even our identity, stored in this wallet, because there's also a great driver in that space. And I think also it's a great point that you mentioned that people always in this space, they kind of sometimes live in their bubble where they think everything has to just directly abruptly happen. But I think a more seamless and smooth process through step by step, and gradual progress will be the way to go, at least for people that are still as of now a bit hesitant. So thank you, Fabio, for your great insights. It was a pleasure talking to you, and we
one
talked
more,
very long.
one more.
One more? You have one?
I
What?
hope I I hope that DeFi becomes the new Tesla. You know,
Okay.
that DeFi is taking off, even
Yeah.
it have been avoided by others, but it takes off. And these days, Tesla is the one that is pushing the whole industry to
Mm-hmm.
its new levels. And let's cross fingers that tokens and DeFi can do the same thing for the traditional banking.
Yeah.
Yep.
Yeah. Definitely, that's a a great final statement, Fabio. Thank you for that input. And yeah, as mentioned, it was a pleasure having you, having your insight. Thank you for taking the time, and yeah, looking forward to talking to you again soon. Have a great day.
You too. Enjoy. Thank
Bye
you so
bye.
much.
And to
Goodbye.
our listeners. So thank you as always for joining our podcast, or if you joined live or via YouTube, for watching. As always, feel free to reach out to me anytime if you have any questions or concerns or suggestions in terms of who we should interview next. And other than that, I would say see you next week and have a great weekend. Bye.